This is the Uptick Network Stock Day Podcast, sponsored by InvestorsHangout.com. Penny stock news and interviews from the microcap world. Public information on OTC, pink sheets, and microcap stocks from around the world. With your host, Everett Jolly.
On today's show, we have a very exciting guest with us. He is Stewart Wallach. He is the CEO and chairman of the board of CAPC, Capstone Companies, Incorporated. Stewart, thank you and welcome to the show.
Thank you.
I wanted you to give a little update of your company, what you guys do, and a sidebar of yourself, and then we're going to get into the Q&A today.
All right, very good. Well, Capstone is an innovative creator of specialty LED lighting products, predominantly for the home. We specialize and initiated the company by starting power failure lighting development, as well as specialty applications, which we also sell under Capstone Lighting and Hoover Home LED brand, which I'll expand upon a little bit later. Our products are designed around very core capabilities of LED lighting, wireless motion sensors, induction charging systems, battery power, and control. Our growth strategy is to continue to introduce new LED home lighting consumer product categories to the market through a very strong ongoing development of innovative and technologically advanced ideas and concepts. We plan to leverage our product successes by expanding our offerings into all the categories of the LED home lighting product lines. We started with some small handheld LED lighting, and today the lines are quite expansive. We have a very low-cost operating model, and we own our products from design through development. All the molds are owned. We do not get involved with off-the-shelf product. Our customers include big box retailers such as Lowe's, Home Depot, Costco, Sam's Club. They have appreciated our innovation and the expansion of our power failure lighting into other products that have resonated very well with the consumers. Things like small accent lighting, under cabinet lighting, always, of course, focusing on LED. We sell our power failure and wire motion sensor light product lines under the established line of Capstone Lighting brand. And in May of 2015, we launched an expansion of our products under a new brand referred to as Hoover Home LED lighting products. Hoover, of course, is the 100-year-old brand that is focused on floor care.
Absolutely.
We had an idea about the opportunity to expand that line, extend that name into a large category such as LED, and we presented it to the parent company, and they gave us the license to utilize the name, and in fact, we're the first license that company has ever issued. And the success has been, it's been very solid for us. So today, we're marketing two brands. We're marketing Capstone Lighting, and we're marketing Hoover Home LED.
Let me ask you this. Why the stock split of 1 for 15? Is that going to help you get on the OTCQB? And is that where you guys are headed?
Well, it's a good question, and it's a great setup for me. The reverse split was a major step in advancing our investor relations strategy. We have reduced our share outstanding from 700 plus million to now just about 48 million. And as everyone knows, this does not have any impact on market value, but optically, it should have a very strong impact for us. With the reduced share count, the growth in net income on a per share basis will be more readily apparent to the shareholders. Relative to uplisting, yes, we are already approved, and we are uplisting our shares to OTCQB, which we intend to do on August 22nd.
Well, congratulations on that.
Thank you. Thank you.
Also,
our goal is to broaden. I'm sorry. Our goal is just to broaden the exposure of the stock, and provide a greater level of confidence to the shareholders.
I also wanted to congratulate you. Not too many CEOs can take their first quarter from $2 million and go into their second quarter of $8.6 million. Was that domestic or was that some of the international sales? And can you expand on that a little bit for us, Stewart?
All right. Well, it's interesting you say that because we're very strong in the warehouse club channels. It's an area of business that works well for us, because they not only recognize the importance of innovation, but they also are very comfortable on purchasing product on what we call direct import basis. So we're able to be very competitive because we have an overseas operation that controls the factories, controls the product development, controls all of our QC. And the success rate has been very strong with the channel, the warehouse club channels. And of course, because they have global locations, over the course of the last year particularly, regions such as Taiwan, Japan, Australia, the UK, have all picked up our products. So yes, the growth is coming from the international penetration, but it's really coming from the fact that now that we're a proven entity within the channel, we're getting, I think, the benefit of the doubt when we bring new products to market. The channel is very receptive to moving forward with us quicker than they did before. So it's a combination of things.
My guest today is Stewart Wallach. He is the CEO of Capstone Companies. They trade on the OTC pink sheets, but currently they will be, or soon to be trading on the OTCQB under the ticker symbol CAPCD. Now, let me ask you this: how big is this market space? I mean, are you guys the only player in this? Where do we go from here? You got a market cap, and correct me if I'm wrong, you got a market cap around $24 million. So what's in store for us for 2017 and 2018?
Well, keep in mind, and I want to be as open and fair with you as I can about this, our focus has been on just developing a solid business. Quite frankly, probably to the frustration of some of our shareholders, longtime shareholders, we never really focused on shareholder value until we knew we had a very solid business model that gained traction, had sustainability, and all the things that an investor really should look for in a company. Once we knew we ticked off all of those checkpoints, then we were happy with bringing up the recognition and the awareness. Now, along those lines, today, I would say through Q3, we're probably tracking in excess of $20 million in revenue. Last year, we did $15 million all year. This is not a surprise to us. As the products continue to get accepted and they continue to gain traction with the consumers, these numbers will continue to rise. I would be surprised if we didn't finish close to $25 million this year. But at that rate, then there's no question we should be able to double the company again next year.
What do you think the driving force is behind this growth?
Purely innovation. I can tell you it's innovation and low-cost operations. You know, one of the things that we've done, and I've had a number of successful businesses, we've always used the same formula. Keep a very low cost of operation and excel in service. What I mean by excelling in service is being able to bring a product to market at the lowest possible cost, even though it may be one of the most innovative categories. In this way, when a retailer does business with Capstone, it's not a matter of starting high and then anticipating that there's going to be the erosion, which allows for competitive situation to come into the marketplace. In our case, we price the product right from day one. It's innovative. It's not a product that you can buy elsewhere for the most part. And we're getting a very loyal support now from the large channels. So I anticipate the growth to continue. We're very bullish about it. We're moving into several new categories of LED lighting, solid state lighting. For instance, we've just launched a line of bat vanity lighting. And I should point out also that these products are more expensive products than what we've built our initial performance on. So selling one unit at $5 versus one unit at $25
Exactly.
is also going to contribute greatly to our revenue without necessarily stressing the organization. We've got a team overseas. Our overseas office and subsidiary, Capstone Hong Kong, is headed up by Larry Sloven. He has been living resident in Hong Kong for 23 years. He has been a buying agency for such noted companies as Dick's Sporting Goods, Circuit City, etc. One of my biggest claims to fame, if I could say so myself,
Absolutely,
is that I've got top four guys, top four executives with me. We've been together 20 plus years.
Well, I always tell my listeners, you know, when you buy a home or you do a business, it's about location, location, location. But when you want to buy a stock and you're looking at it, it's all about management.
Oh, I inclined to agree with you. And, you know, we've been together, so there's no learning curve. There's no love fest half the time either. But, you know, when you get in a room and you've got your objectives clearly defined, when you leave that room, everybody understands what's expected of them, and they show up with the results. And I think that's a real differentiator in today's world, especially in small companies. We're a powerful group of executives, seasoned executives that have a history of experience in the business we're in, which is more important than anything.
Well, my guest today is Stewart Wallach. He is the CEO and chairman of the board of Capstone Companies. They trade on the OTC pink sheets under CAPCD. I do have one question for you in closing here, and if there's anything that we didn't get a chance to talk about, you know, please, you have the floor. But how many box stores are you guys in right now nationally?
Right now, we're nationally in 3 of the big boxes. So again, our business model, we don't try to go to second-tier accounts. We don't try to go to the mid-range accounts. We only want to deal with the largest possible distribution. And we're not a regional supplier. We don't deal in regional business. The reason is our business model lends itself to it. We're strictly dealing in very, very large volume purchases and large volume sell-through.
In closing here, Stewart, is there anything that you and I didn't get a chance to talk about that you would like to get out to the listeners?
No, at this point, I appreciate the questions that were presented to me. I think that if there's anything I'd like to say, if I don't mind taking advantage of this platform, is to our longtime shareholders who have really been very supportive. I want to thank them for their support. And insofar as new people that are interested in our company, it's an exciting company, but we're not new kids on the block. This is a business and a formula that we're very comfortable with. It's something we've been doing, as I said, for more than 25 years, not necessarily in Capstone, but at other companies. We've always been focused in on hardware and automotive, and we have been successful time and time again. And we're really looking forward to 2017.
Capstone Companies, real management, real products, real revenue. They're on the uptick, if I may say so. My guest today has been Stewart Wallach. Stewart, thank you for coming on the show today. We're going to check back with you in a couple of months, and I wish you the best.
I look forward to speaking to you again. Thank you.